Hey guys, welcome back to the channel. In this video, we're going to go over a couple of our indicators that we talk about on the channel all the time. The EMA, which is the Exponential Moving Average, and the SMA, which is a Simple Moving Average. This is a remake from one of our first videos we ever did on the channel. Like I said earlier in the year, we're working on remaking our playlists, making them a little bit more entertaining, a little bit more informative. And how come anyone didn't tell me that first video how boring that thing was? My goodness. I mean, come on, people. You can tell me. I'm just joking. I rewatched it this morning and I was like, geez, I just sounded so unexcited to explain the EMA and the SMA. So I wanted to go more in detail on it. We're going to show you a quick example of each. I'm going to show you how I set them up, and then we'll go from there. So if you watch the videos, you know I'm always talking about the importance of crossing over the SMA line, the red SMA line, and we don't talk a lot about the green EMA line that I have on my charts, but we're going to today. So yeah, let me know if this helps. I hope it does for those of you who are just getting started or watch the videos and like, what the heck is this guy talking about? So the Exponential Moving Average, also known as the EMA, this is off of Fidelity.com, and it says the Exponential Moving Average is similar to the Simple Moving Average, measuring a trend direction over a period of time. So both of them are going to measure some type of trend, okay? And it says, however, whereas the SMA simply calculates an average price of data, the EMA applies more of a weight to the data that is more current. Because of its unique calculation, EMA will follow prices more closely than the corresponding SMA line. And before you get too freaked out, you don't have to calculate anything. All of the platforms and computers and all that stuff, they calculate everything for you. You don't have to sit there and crunch any type of numbers. Okay, so how this indicator works, it says basically it says you use the same rules that apply to the SMA, which we haven't gone over that yet, but we will. When interpreting data, keep in mind that the EMA is generally more sensitive to price movement, and I'm going to show you what I mean like that in a second. It says this can be a double-edged sword. On one side, it can help you identify trends earlier than an SMA would. On the flip side, the EMA will probably experience more short-term changes than the corresponding SMA. Okay, and it says use the EMA to determine a trend direction and trade in that direction. When the EMA rises, you may want to consider buying when prices dip near or just below the EMA. When the EMA falls, you may consider selling when the price rallies towards or above the EMA. Okay, so keep that in mind. It's kind of more important. It's more of a short-term thing as far as you're looking at the trend, and I'll go over the differences here in a second, so just kind of bear with me. Okay, so that is the EMA. So what is the SMA? The SMA is a simple moving average, and it's kind of in the word. It's a little bit simpler to read. Okay, it says moving averages are one of the core indicators in technical analysis, and there are a variety of different versions. SMA is the easiest moving average to construct. This is the red line on my chart that I always talk about. It is simply the average price over a specific period. The average is called moving. It's called moving because it's plotted on the chart bar by bar, forming a line that moves across the chart as average values change. So basically the easiest way to spot the trend, in my opinion, because as you see the red SMA line, every time all these candles are closing below the red SMA line, guess what? We're in a downtrend, but as soon as it crosses over and holds support, what happens? We change that trend and we're above. This is why I stress the importance of the red SMA line whenever we're doing swing plays, whether short-term or long-term. This is how this indicator works. SMAs are often used to determine a trend direction. If the SMA is moving up, the trend is up. If the SMA is moving down, the trend is down. A 200-bar SMA is a common proxy for the long-term trend. 50-bar SMAs are typically used to gauge the intermediate trend. Shorter period SMAs can be used to determine short-term trends. So, okay, got that out the way. Let's actually go to the charts now. I'm going to show you how I set them up, and I'm going to show you exactly what they're talking about on Fidelity. I'm going to give you a couple of examples of how you could read the SMA lines, whether on a day trade, swing trade, or both combined before you enter or exit a position. All right, guys, so we're going to go ahead, and I'm on TD Ameritrade. I'm on Thinkorswim. That's my go-to. So if you go to studies, I've already have it entered in, and if you haven't seen the video of how to set up the indicators, I made that. It's on in the channel. Go ahead and search it. I'm actually it should be popping up here in the right hand corner of your screen. You can take a look at that of how to set all these things up. Okay, so I have here simple moving average. I'm going to show you just how I set that up. When you go to search for it, you just type in simple or SMA, it should pop up. The setting is closed, 180 length, 0 Breakout signal, yes. And right here, you can kind of make this your own. You can draw the lines different, however you want. I prefer to put the red as my color, just because it differentiates from the green. And also, it kind of acts as kind of a warning for me when it gets close to that red SMA line. It's kind of like the danger zone. Like, are we crossing below that? Are we bouncing off of it? That's why I keep it as red. Okay, that's the SMA. The exponential, okay, close, price length of 9, display 0, breakout signal, yes. And then I change that to green because basically whenever the price bars close above that green EMA line is basically telling me that this is money. This thing is going to keep going up. Okay, and I can kind of track it and make sure that it's going where it needs to go. When it closes below, which I'll show you in a second, it's kind of it's a negative thing. It's going to push that price down. Okay, so let's take a look here. This is Tesla. All right, we're going to take a look at Tesla, and we're going to look over here in the undervalued section here where Tesla's at. Okay, so Tesla, let's go about right here. All right, as you see the green EMA line, we have some sell signals, and our candles are closing below the green EMA line. So what happens to the price when that happens? It pushes it down. Okay, it pushed it down. However, look at this. Here's the red SMA line. We're still trading well above the red SMA line. So although we're pulling back, it's not necessarily end all be all, because we could push back up, right? So now we get a buy signal. All right, but we don't really close above that green EMA line. So if it pops up here, you kind of have to be a little cautious because you don't have a full candle close above the green EMA line. And what happens here? Sell signal. Now we get some bars closing below the green EMA line, and we're pushing down. But what happens here? We bounce off of the red SMA line. All right, and then that's a great sign of support. So now we have a buy signal, confirmation candle that's closing above the green EMA line. And now what do you see? You see a positive trend, okay? And you see that the price is coming back up, and then you see the trend kind of reverses itself again. We close below it, it falls down, We find when it fell down this time, though, look at this. Okay, we bounced off of the red SMA line, we came up. When we broke below the red SMA line, what happened? Our price went down a lot further, okay? And that's more of a longer term trend there. If we fall below the red SMA line, you're bound to have a longer term downtrend until eventually the market will correct itself. Okay, notice here we bounced off of support here, we broke support here, we got back above, bounced up, and then we broke it again, and then we kept trading below it. And all of a sudden we had this big run here, okay, where we had a buy signal, a couple candles close above that EMA line, pushed up. The big test was, can we get above the red SMA line? We did, but then we held above there, okay? And now your trend's deferring until the end. So it's actually coming to a crucial point here on the red SMA line, which is about 962. If we fall below that, we could see a little temporary downtrend in Tesla, or if we bounce off of that, then you could see it popping back up towards the $1,000 mark or above, right? So these indicators are what I use for a swing play, whether it be for the long term or the short term. So for me, if I'm looking to enter in, okay, on a swing play for the long term, all right, I want to make sure that, you know, if I've gotten beaten down so far down here, I know that eventually we're going to have a little, we're going to have some type of support, and we're going to eventually make our way to the upside. But I'm still a little cautious because I'm below the red SMA line. What you would like to see is it pop up, maybe a pullback, and bounce off of that. So for example, here, if it falls down and bounces off of the red SMA line, I'm more inclined to go buy because it shows a good sign of price strength and that we should push higher, okay? Also, I'm not going to enter into a position until I see that I'm getting some candle closes above that green EMA line, because I may continue to keep pulling down. If I'm in, you know, this is not the only indicator I use. Obviously, they all have to line up. The RSI has to make sense. The MACD has to make sense. If I'm in a bearish pattern and the price is coming down, that's really when I want to buy, because eventually it's going to change and come back up, right? It's really the easiest one to use is the RSI and the MACD, because you can kind of better predict that you should get some type of uptrend. The RSI, if we're down to close to undervalued, then I'm more inclined to buy, especially if we're in that bearish pattern. So like this lined up perfectly because we were almost in undervalued. we're in the bearish pattern. All of a sudden we bounce off of this support level and we push up extremely high. Okay, so this is just one indicator that I use. It's not the only one that I use. So if you haven't watched any of the other indicator videos that I made, make sure that you watch those in order. And then we're going to go over the next one that comes out. It's going to be the Hikanashi candles that I use, explaining those and the significance and the importance of those, and then watch them all together to kind of get a better understanding of all of the things that come into me entering or exiting a position. It's not just one indicator. So anyway, guys, I hope this helped. Let me know your comments below. Other than that, we'll catch you in the next one.